The Trump tariff storm has really shaken the world, taken it by a storm quite literally. There is economic uncertainty everywhere, and as the new battle looms, this time between the world's two largest economies, we ask that what could be the future? China has labelled Trump's latest tariff threat as blackmail, vowing to end and fight to end as tensions escalate towards what could possibly become the most destructive trade war in history. President Trump's threat to impose a staggering 50% tariff could probably push levies upwards of 100%. How will this cripple industries? Is the big question, and that's really sent shockwaves through global markets. But China isn't backing down. Meanwhile, within Trump's own ranks, cracks are now forming. Tech mogul Elon Musk has clashed with trade advisor Peter Navarro, calling for zero tariffs with Europe as the Dow plunged over 5% yesterday. It was the biggest drop since the pandemic. Of course, now today the Dow futures seem to be looking up, but the story is far from over because the markets may tumble again, given the fact that uncertainty and questions still remain. We ask the question, who will blink first in this high-stakes showdown? And before I get in my guest this evening, I want to put out those big questions that we always ask on India Global. First up on the show today is will a divided team force Donald Trump to climb down on tariffs? Why? Because Elon Musk is clashing with Peter Navarro. The second key question I'm going to ask our guest this evening is who will be the worst hit by these high tariffs? He's slashed them across the board, but who could really be the hardest hit? Next up, are Trump's tariffs actually focused primarily on China and then everybody else is just collateral damage? The next question, how will India be impacted in all of this? We recovered from the meltdown that happened yesterday, but what's the way forward? And why have markets calmed after yesterday's meltdown? Is there something that markets know that we need to watch out for? That's the question that I'm going to first up put forward to Radhika Gupta, who's the MD and CEO of Edelweiss Mutual Fund, joining me on the show, along with Curtis who is from the Milken Institute as well. But, Radhika, let me start with you. Thanks so much, first of all, both of you, for joining me today on India Global. Radhika, let me start with you. Markets have looked up after the carnage that happened yesterday. I want to ask you, as someone who understands this like the back of your palm, what do you think has been the reason for the change in the sentiment between yesterday and today?
No, I won't label today's move as a directional change in sentiment. I still think we live in very uncertain times, and in times like this, what you see in India's equity market is it reacts to US futures and the movement overnight. So there's a little bit of calm that emerged overnight. All Asian markets opened positive, and so did ours. But I think if you're asking me, is the environment of uncertainty over? I don't think the environment of uncertainty is over. In fact, we have a potential major event, as you mentioned in your headlines, tonight with China's supposed 104% tariff or whatever that will be. So until we get clarity on what tariffs, how much tariffs, because there have been threats, there have been impositions, there have been rollbacks, there have been more tariffs, I think the environment of uncertainty in India is going to loom. There have been some positive beliefs and statements. One, that India is going to be less impacted than other countries like Vietnam or China. The second is our foreign minister talked about a potential bilateral trade deal, and India's talked about dialogue rather than retaliation. So some positive news coming in, but is that enough? I don't think so.
Yeah, indeed. And, later on in the show, Radhika, I'm also going to get Alicia later on, who's the chief economist for Asia Pacific at the French Investment Bank and Actisis. But, Radhika, the other thing you said that there is some positive indicators, though the sentiment remains negative. But the question I want to ask you is that while these trade headwinds remain, there is a very strong position that has come from Team Trump, which is that they aren't going to back down. Those tariffs stay, and we are talking on the eve of when those tariffs are actually going to kick in. So what do you think could be the outcome tomorrow, or what is it that we should brace ourselves for tomorrow?
I think the market, I mean, what happened overnight was very surprising. And I think it's very hard for the market to brace itself for an outcome. I keep saying these are unprecedented circumstances. The rules of globalization and global trade are being written. And, if history is any measure, the last time the US imposed tariffs like this, the last two times, it led to major recessions or depressions. Now, I don't want to sound alarm bells. But these are unprecedented times in the history of global trade. So I think markets are going to play it by ear. There are some countries like the European Union who are negotiating for zero tariffs, and I think that will calm the situation down. But we haven't seen a Chinese reaction today. So I think markets will just have to play it by ear.
Indeed. And Curtis, you're the former US ambassador to the Asian Development Bank. Explain to me the fact that China is actually taking a very hardened position against Donald Trump in this. How do you think this could pan out? Are we now set for a trade war between the largest and the second largest economy?
No one in this world wants a trade war. The reality is both President Trump and President Xi Jinping are really playing to a domestic audience. They each need to think through, how do they come across? How do they look stronger? What is that face-saving way out? I think the reality, when I look across the region, one of the challenges will be, of course, each country's reaction to these tariffs. And so right now I happen to be in Southeast Asia in Thailand, which is higher up on that list of tariffs being imposed by the United States. But the fear is less about tariffs just on Thailand. The fear is what happens to China's excess, excess exports. If the US, if Europe close themselves to these less expensive Chinese products, will they be shipped out across Southeast Asia with consequences for domestic manufacturers in Thailand and across the region? For many people that I deal with in the region, that is the worry. So it's not just they're worried about China's reaction back to the US. Ultimately, these countries are big enough, they will survive. But who will suffer in the interim period? That is the big issue. And I think in some of your earlier questions, you talked about collateral damage. Will the collateral damage be smaller nations, companies in smaller nations? And I think that is the real concern. For the United States and China, ultimately, as in the past, they will work something out. But who will be hurt in the interim period?
That's an important question. And Radhika, you want to weigh in there that, a lot of Indian domestic industries are also very worried about it, that, China may go ahead and dump a lot of its goods in India, as Curtis was pointing out, because other trade opportunities may shut and they would just use India as that dumping ground.
I think there are two parts to this. As Curtis said, there's a dumping angle from China, particularly vulnerable industries like steel, for instance. An industry like cement is less vulnerable because it's largely a domestic industry. Steel is a very vulnerable industry. And I think to this extent, this is time for, people here also to buckle up and think of incentives and what we do about our exporters, what we're going to go out and do for our exporters. Again, India is a large country. The contra to this is, if you compare India to the rest of the world, if you compare India to a country like Vietnam, for instance, Cambodia, for instance, one, the tariff levels are in absolute lower. Secondly, our largest two export industries are IT services and pharma, which for now, let me say for now, have been left reasonably insulated. And if you look at the remaining amount of export impact that India is hit by, it's not very, very large. We also share very good relations with the United States. Prime Minister Modi and Trump are, reasonably friendly. I think Trump has alluded to that in multiple comments about India. So there's hope that, we'll be able to work something out. But it's really time for us as a nation to buckle up and see how we'll support our exporters in reaction to this potential China dumping.
Indeed. Curtis, you want to comment there? The fact that India is relatively insulated or relatively in a better position as compared to Vietnam. I think Vietnam is one country that maybe the world needs to talk more about, given what it's really facing right now.
There's an interesting point in all of this, which is that notion: have countries benefited from being shut off? I think those in the United States, those in India will know best. How protected are our industries? How protected is our agriculture? Is our automotive industries? So there is a real point about tariffs that President Trump has. But a lot of folks in the past, of course, been on what they call non-tariff barriers to trade. What are the things that a US or an India or a China does that where they say, actually, we have no tariffs? But the reality is that American or Indian or Chinese businesses will know how difficult it is to get goods into another nation because of what are known as non-tariff barriers. So I think beyond this, hopefully at some point over this year, trade fight, people address the very real barriers that trade exists, tariff and otherwise, and how to, again, countries preserve things that are really in their national interest, to have a domestic food industry or a national security industry, but address these continuing persistent challenges to free and open trade.
Indeed. Very quickly, Radhika, I want to ask you this, that if there's one advice that you would give, given the volatility in the markets, what would that be?
I think the advice to investors is not to take extreme reactions into panic. The other advice, and these are uncertain times, is not to look for immediate answers. So, typically in market corrections like this, investors are looking to say, is this about to end? Is this the bottom? I mean, everywhere I'm traveling, people are asking, is this the bottom? Should I buy? And I would again repeat what I've been saying. These are uncertain times. It's very hard for anyone to say, is this a bottom? Are the valuations cheaper than they were 6 months ago? Yes, they are. But do you expect a recovery in 3 months? No. So sometimes the best action is inaction. It's a little bit of calm. Let the situation play out. I think, India has twin challenges between tariffs and our own domestic slowdown. And let the next couple of months, work themselves out. And then take any action. So, don't look for immediate answers.
No action is the only action that we should actually be taking.
No action is the best action.
Okay.